The IEA, the International Energy Agency, substantially downgraded its forecast world oil demand this year and warned of a natural gas glut in its world energy outlook. The IEA also indicated that a dangerous decline in the level of investments into the sector had been further impacted by the financial crisis. Guy Johnson has been speaking to the executive director of the IEA, Nobuo Tanaka, and asked him how he felt about a report in the Guardian newspaper alleging that the agency was politically influenced.
No, I don't think so, because we are very much say, neutral and very professional organization. But of course, this is international organization, so we are consulting with our member governments in many ways. But certainly in this World Energy Outlook, this is publicized under my sole authority and responsibility. So we show this as peers in the global, let's say, community, in the oil and energy experts, and we get their input to our work, and we are very responsible for this. So I think some concern is very groundless, and but we are always saying that yes, we are getting more and more tough markets in the future. Decline rate is getting higher and higher. So we have to invest. Otherwise, demand peak will come. So peak oil will come.
What reference scenario have you got in this report for the dollar, and do you worry about a dollar crisis?
Of course, we are worrying about the dollar crisis, but in our assumption, I think we see that the current level will continue to stay. In
current
our
level?
Yes, in our assumption, I think.
Many in the market worry that central banks around the world are pumping too much liquidity into the system, and that liquidity is finding its way into hard assets such as commodities. Is this policy pumping up oil prices and energy prices artificially?
Well, we think that certainly this, let's say, weaker dollar contribute to the higher price of commodities, including oil. That is true. We observe that. Are there excess liquidity by this, let's say, economic stimulus packages? We have to argue and assess more carefully about its impact. But certainly it is true that among the different elements of the price formation of the commodity and oil, yes, currency is one of the major factor.
You spent a lot of time talking in the presentation about the fact that there is a glut when it comes to natural gas. With oil obviously looking increasingly hard to come by, presumably such a glut can only be a good thing.
Well, it has good thing and bad thing. Good thing because in the short term, certainly the consuming country has an advantage of cheaper gas for the economic growth. On the other hand, for the long term, certainly there are, I would say, a negative impact to the incentives to invest, because we need gas as a bridging sources for climate change, because gas is relatively cleaner compared to coal or oil. So we need gas if other technology cannot materialize as we expect, like for 50. In that case, certainly the gas demand will increase. So for that, we have to invest again now for the gas sector. But cheap prices or glut in the capacity means there are less incentives to invest now. So that is our concern.